For more, we're joined by Selina Xie. She's the head of consumer research at Mirae Asset Securities. Her recommendations on beer makers like Tsingtao and China Resources Enterprise have generated returns of more than 20%. Selina, China's move to boost domestic consumption is gathering pace in light of volatility in export markets. At the same time, though, the government is tightening credit and lending. How will this affect domestic demand, real incomes, household debt?
I think when household debt is concerned, most of it's mostly related to homes or residences. And when people are borrowing for their homes, that's mainly contained within the coastal area. And after all, the bulk of the population is still in the inland. And therefore, when credit tightening is concerned, I think it's not affecting most of the population. And that's why I think the government's trying to stimulate demand or stimulate consumption in the inland area, so central and western area. The latest that we've heard is like subsidies for building materials so that the farmers can build their homes, and also subsidies for commercial farming, as well as the durables like electrical appliances and automobiles.
Given the tightening, it does seem like returns on stock and property investments may be lower. What will that mean for spending?
Actually, I don't associate a lot with credit tightening to the consumption in China, because a lot of the consumption still is based on cash instead of credit. But having said that, I think you're referring to the stock market gains that a lot of the investors are having, so that the market's expecting them to, in turn, spend on private consumption or retail goods. That, I think, is still accounting for quite a small portion of the general spending as a whole. In fact, the real household income is still on the rise, because a lot of the jobs that people are having are giving them quite a pay rise, at least in 2010 or 2011.
Our guest today from Allianz was saying that it's going to be a very volatile market. What investment themes should investors be looking out for?
I think for 2010, we're expecting food inflation, because the food price CPI had tilted up ever since the third quarter of last year. And for this year, probably it's going to go even higher. And therefore, inflation is definitely going to be a theme. And the major beneficiary of such would include most probably supermarkets and the sectors that's going to have strong pricing power. And to me, that would include breweries.
And among your picks for brewers include China Resources Enterprise, Tsingtao. Why are they the best proxies for this particular sector?
Because they are the #1 and #2 players in brewery in China. And therefore, we do expect both ASP, so selling price, to move up, therefore to support the margin increase in 2010.
What kind of increase are you anticipating?
I'm anticipating less than 1 percentage point increase in the gross margin for 2010, but that should translate into quite substantial growth in net profit during the year. And therefore, for both companies, I would expect them to deliver above average earnings growth.
Can you quantify that, above average?
Average consumption growth in China in the past 10 years has been around 10 to 15% every year. And I would expect both Tsingtao and CRE to deliver more than 15% net profit growth in 2010.
And in terms of upside for those stocks, by the end of the year, where do you see them headed?
I would expect them to deliver at least 20% price increase.
Selina, you have a buy recommendation as well on meat supplier, China Yuren Food. I mean, this stock, along with vegetable grower Chowder and noodle maker Tingyi, have the lowest price to earnings growth ratios among Asian consumer stocks. Does that make sense? Does that make these stocks attractive?
I think PEG ratio may not be the catalyst to share price performance. The main reason for that is because E is a moving element. When we're talking about most probably input raw material price to move up, some of the companies may not have the pricing power to increase product prices, and therefore sustainability of margin can be problematic for 2010. And therefore, not all of them would see a share price increase in 2010. Having said that, I will focus on the companies that's having or going to benefit from government policy. We've seen the government quite determined to support the upstream farming sectors, and therefore I would choose the ones that's closest to the upstream. And among the three companies that you've mentioned about, we do like Hyori.
In your view, what would be the biggest risk in investing in this company?
Biggest risk would be execution. That's always been a problem for some of the smaller companies in China. Whether or not management would be able to execute their business plans according to their drawing board is the major problem. Or major
Selina,
risk.
another stock that you like with mass appeal is Sinopharm, China's biggest drug distributor. But it's gained more than 60% since its debut in Hong Kong and is trading at a higher earnings multiple for next year versus its peers. Why does Sinopharm deserve that premium?
I will still be focusing on growth. I believe that Sinopharm is going to outgrow both its peer companies as well as the sector. And actually, if you were to look at the valuation compared to most of the listed A-share pharmaceutical companies, Sinopharm's PE is not that high.
Okay.